Welcome to Mike Carpell and Associates, an industry leader in providing premium finance life insurance and other tax-advantaged programs. For decades, 75% of Fortune 1000 companies have used a little-known yet very lucrative financial tool that provides them high return on investment and minimizes risk for increased financial security. These programs generally have only been available to large companies or those with substantial free cash flow. Now, through Mike Carpell and Associates and the power of premium finance life insurance, your company or organization may soon be able to enjoy these same benefits.
Hi, I represent Mike Carpell and Associates, a licensed insurance and financial consulting firm with affiliated agents throughout the U.S. Our company provides premium financed insurance programs that offer the best combination of high ROI, low risk, minimal out-of-pocket expenses, and a long track record for safety of principal. In the next few minutes, you're going to learn about a special loyalty and retirement program called Company-Owned Life Insurance, or COLI for short. At MK&A, we make it even more lucrative to companies by utilizing a technique known as premium financed insurance. In this example, MK&A brings together representatives from an A or A+ rated insurance company, a nationally known bank, a company, and one of its employees to explain how the program works. It begins with the company inviting us to their office to explain the program. Please join me and my associates while we demonstrate to this company and its employee how this program will benefit them. Of course, you'll also learn how this program could benefit you and your company.
So tell us about the COLI program and how it can benefit my company and my employees.
Well, this is an insurance-based program where the premiums are financed by a third party, usually a bank. And this provides benefits for both the insured employees and the company. Now, at the time of death, the life insurance death benefits will be divided between the employee's beneficiaries, an employer-owned trust, and the bank for repayment of the loan and interest.
In essence, the proceeds from the policy repay the bank for the loan plus interest, and the balance is shared between the employer's trust and the employee's beneficiaries.
So, if I decide to participate, I won't be responsible for paying the insurance premium?
That's correct. Banks like ours pay all the premiums. Premiums are not paid by either the employee or the employer. The employer is responsible for paying interest on the loan, but for qualified employers, it's possible to use a letter of credit to cover the interest, thus substantially lowering the employer's out-of-pocket cost.
But what happens if an employee quits, gets fired, or retires?
The insurance policy stays in effect. The policy is not discontinued, so the employee may continue to receive a benefit even after leaving the company, depending on the agreement made with the employee and the company.
How is the money shared between the employer and the employee's beneficiaries?
Well, generally, the employee's beneficiaries usually receive a higher death benefit than if a similar policy were purchased by the employee. However, there's no fixed sharing ratio. Sharing is based on a prearranged agreement between the company and employee, and the arrangement is whatever is agreed upon. But in any case, employees never pay a dime for this benefit.
What happens to my policy if the company files for bankruptcy or decides to close the business?
The trust and policy remain fully funded and in effect. Both the employer trust and the employee's beneficiaries still receive the money as long as the plan has been in effect long enough to reach a value in excess of the accumulated debt. And this usually occurs within 3 to 8 years.
Does the employer pay taxes on the death benefits that go into the employer trust?
Money paid into the trust for salaried people earning $105,000 or more is usually tax-free. In addition, 35% of the money paid into the trust for employees earning less than $105,000 could also be tax-free.
Are there any restrictions on the money paid into the trust?
There are no restrictions. It's all your money. You can use these funds for any purpose you wish.
Is the money paid to the employee also tax-free?
It may or may not be, depending on how the deal is structured.
As an employee, why would I want to do this?
Because all of the money that your beneficiaries receive, even after taxes, is still free money. Even if you have other life insurance policies, or even if you leave the company, your beneficiaries will still receive the money, and they can use the money for any purpose they wish.
Why would your bank lend our company this money?
Because it's a secured loan. Normally, when we lend money, we run the risk of the borrower defaulting. But with a life insurance policy collateralizing the loan, we're guaranteed to get paid.
How come I've never heard of this before?
Well, as you well know, life insurance policies have been around for many decades, but the premium financing for this program is relatively new, and now it's being offered to you by MKNA. We bring together the bank and the insurance carrier so that we can offer this premium finance program to companies and also to high net worth individuals.
Well, who decides if an employee joins this program, the employer or the employee?
Each employee decides for themselves. Our program is totally transparent. Before a policy is ever written, a licensed insurance agent meets one-on-one with each of your employees to fully explain the program. Employees who want to participate and get the benefit can enroll. There's no requirements and no coercion for them to participate. Our job is merely to explain the program. It's totally up to each individual employee to determine whether or not they want to participate.
I like the fact that my employees decide for themselves whether or not they want these benefits. Are there any other benefits to my company?
Yes. After a few years, these policies could build substantial cash value far in excess of their face value. And when this happens in certain circumstances, employers can retain access to the cash value in the policies. And this gives you a major benefit that you could use to your advantage long before the policy pays the death benefit. Now, there are many flexible options, and each will be fully explained by the licensed agent assigned to your company. You can then choose which option is best suited for your company and your employees.
I like the benefits and I like the flexibility, but what is the cost to my company?
Well, the cost is relatively small, especially when you compare it to the payout. Because the bank is paying the premium, all you have to do is pay a small percentage of the premium as interest on the loan for the first few years. After that, the policy should build sufficient cash value to finance all future premiums.
We use the power of leverage to multiply the benefits to your company. Let me give you an example. Suppose the annual premium on your company's program were $1 million. Because our bank is providing the premium payment, your company would only be responsible for the interest to service the loan, saving your company many hundreds of thousands of dollars annually.
And for companies that qualify, this program is even more lucrative because instead of paying the interest each year, our bank will make a loan for the interest payments as well, provided you post a letter of credit. And since the fee for a letter of credit is usually around 1% of the loan, this could potentially buy tens of millions of dollars of additional insurance for just a few $1,000s, which substantially increases your benefit. Then after the death of the insured, the bank would be repaid for the loan, the interest on the loan, and any interest covered by the letter of credit. Of course, every situation is unique, but you'll have plenty of time to review the benefits and costs before you agree to any commitment.
Is there anything else I need to know?
Well, this program is similar to other insurance programs in that we will first need to obtain and analyze data specific to your situation. Then you will meet with a bank and a representative from our insurance company to review the exact details of a program we will create especially for you. You will then be able to make an informed decision on how to complete the program and choose the best options for your company and employees.
And after you review the program that we customize for your company, we are very confident you will be delighted with the results because this program has been specifically designed to create substantial benefits and rewards for your company and your employees.
Is there a limit to the number of employees I can insure or to the amount of insurance that the bank will fund?
No, as long as the business and its owners have a verifiable net worth of at least $2.5 million, earn in excess of $250,000, agree to provide tax returns from the last 2 years and a statement of net worth, we can fund any size premium the insurance company charges. The stronger the credit worthiness of your company, the better the deal we can make.
For employees, we can insure between 5 and 30 times their annual salary. And in most cases, it's reasonable to figure on 20 times each employee's salary.
Well, I think that just about covers everything. So let me summarize. MK&A is going to bring an A or A+ rated insurance company along with a nationally known bank or funding source together to create a custom program for you and your company. We will provide licensed insurance representatives to meet individually with each of your qualified employees to explain the program. Those qualified employees that wish to participate can elect to join the program. The bank is going to finance the insurance by paying the premium on the policies. Your company will be responsible for a small amount of interest on the premium funding for a few years until the policies build sufficient cash value to fund future premiums. And at the time of death of an employee, the death benefit goes into a trust that you control. You take a portion of the money out of the trust to repay the bank for its loan and interest. Another portion of the death benefit is paid to the family of the employee, and the rest of the money in the trust, including the increase in cash value, is fully yours. Plus, in certain cases, you could have substantial tax benefits, and the money can be used for any purpose without restrictions.
So far, it sounds great. Let's set up another meeting to get the process started. Once I see the specific program you've outlined for my company, I'll be better able to decide how we should proceed.
Very well. I'll arrange for the insurance company and a banking representative to meet with you to answer any questions you might have, so that you'll have complete confidence in the program. Thank you for your time, and we look forward to working with you.
Thanks for watching. On behalf of my associates and myself, we look forward to helping you and your employees enjoy a safe, secure, and rich retirement.